So today, me and my partner will be presenting about the final project presentation. And my name is Putri Nur Iman binti Zulkifli, and my partner is Nur Natasha binti Muhammad Charuresha. So the two companies chosen is UMW Holdings and also Astro Holdings. Moving on to the introduction. The SWOT analysis for the company is that first, the company's strengths is the company is one of the largest market share among the foreign cars company in Malaysia. Moving on to the weaknesses, the company production capacity is limited as the main production are not located in Malaysia. In this case, the main production is located in Japan. And as for opportunities, the company's global raw material prices has been steadily increasing, and also their threats is the company is the price leadership by local cars manufacturer.
SWOT analysis for Astro would be the strength is Astro have a strong variety of broadcast service offered to their customers. One of it is Astro Pay TV, which it offers customers to access to 188 channels broadcast without the need of connection, internet, but using their own broadcast satellite. Next is their weaknesses, which is over-the-top OTT, do not need a license in Malaysia. So Astro's weaknesses is that they are not required to be part of the content policy, which conditions state in the Communications and Multimedia Act 1998 for licensed broadcasters in Malaysia. So since Astro is a licensed broadcaster, Astro is governed by the CMA, which does not enjoy the same freedom and standalone OTT such as Netflix. So the opportunities for Astro is that Astro Astro Tribe is a mobile-first regional OTT streaming application that has launched in Indonesia and Philippines. So the main feature of the Tribe is it promise of an updated content experience in variety genres tailored for each market, especially millennials. So the last is threats, which digital transformation of content consumption is one of the threats for Astro. This is because the need for viewing it from local provider is decreased as more people is able to access content through the internet whenever they want. So in example, YouTube is one of the media that gain access of Malaysian viewer. Assuming the choices of media available continue to increase, that then the competition for the attention of audience will be way greater for Astro in the future.
Moving on to the next chapter, which is analysis. The analysis starts with single asset. So we can see that UMW Holdings generate more income compared to Astro Holdings. Moving on to the next component, which is HPY. Holding period is a discount rate bringing the current price of a security into the line, which its stream of expected cash inflows and its expected sale at the end of the investor's holding period. So referring to the table, Astro's HPY is 0.8882 and UMW Holdings HPY is 0.698. So this shows that Astro Holdings has a higher holding period yield compared to UMW Holdings. In this case, a good HPY is preferable to be positive. In this case, the higher the value, the more likely the company to generate profit.
Now I will be explaining on the arithmetic mean. Based on the table, it can be seen that there is only a negative mean for both companies, which is negative 0.008 that represents for UMW Holdings and negative 0.0012, which is from Astro Holdings. The next is standard deviation. So the standard deviation is in a portfolio represents high risk because it reveals that earnings extremely unpredictable and is not stable. So as for the both companies, UMW Holdings has a standard deviation of 0.0240, whereas Astro Holdings has a standard deviation of 0.0262. So this actually means that UMW Holdings has a lower standard deviation compared to Astro Holdings, which means UMW Holdings has a lower risk of investment. And for the last part, which is coefficient of variation, results from the calculation has shown that both companies has a negative value. UMW has a negative 28.3817, whereas Astro Holdings has negative 21.5879. So according to the table, Astro Holdings has lower coefficient variation compared to UMW Holdings. So to conclude, an investor should invest in UMW Holdings. This is because UMW Holdings has a better arithmetic mean compared to Astro. Not just that, UMW Holdings has a lower standard deviation compared to Astro Holdings. As I mentioned before, as a lower standard deviation is good since high standard deviation shows high risk due to its earnings that could not be predicted and it is not stable. Okay, next.
So moving on to the next analysis, which is fundamental analysis. Fundamental analysis is divided into two analyses, which are economic analysis and also industry analysis. As for UMW Holdings, the first analysis is economic analysis, which the article found is article found online in the Edge Market. So the article is written by Kari Hisham Aliman and Adam Aziz, which the news is related to the performance of the UMW Holdings. Referring to the article above, it's mentioned that the company hit the highest share within the duration of 3 months consistently with the price of RM 5.95. The scenario occurs after the biggest move, which to exit the oil and gas industry. Referring to the economic performance of UMW Holdings, the company may have its ups and downs. However, it is the nature of being in the industry which either to gain or lose profit. UMW Holdings managed to improve their performance by having more shareholders, which is one of the company's strategy to generate profit. So as for industry analysis for UMW Holdings, the article was published on the 26th of May in 2017, which was written by a writer named Samantha Ho. The main topic for this edition of the article is discussed on UMW Holdings' performance towards their competitors. The company was expecting a challenging year, although the automotive sales in the first quarter surpassed the initial target. The Chief Executive Officer, which is Badr Faisal Abdurrahim, told that the reporters that what has happened in some recovery and it will still be a challenging for the company to face its competitor. So based on the news, it is clearly stated that UMW Holdings was facing difficulties in generating profit due to the increase in the competitors. For instance, Proton, which was created for the company from other company. Hence, this does not mean that the company to keep going, which having the rise in competitors has boosted up UMW Holdings company to keep going.
Okay, so for the economic analysis for Astro, the article found was titled as Astro Continues to Outperform Media Industry, which was published on the March 30th on the year of 2017. So based on the article found, the issue was regarding on the performance of Astro Holdings. Astro Holdings had reported their earnings of RM 623.70 million for financial year 2017, and this report was made after adjusting exceptional items amounting to RM 24.3 million. According to the article, in the financial year of 2017, Astro's normalized earnings were impacted by higher content costs, cost of merchandise sales, broadband expenses, and impairment receivables. But surprisingly, the television segment's revenue was higher and mainly due to their higher advertising as well as other revenues, which has lowered the subscription revenue. So as overall, Astro Holdings Berhad has cash generation capability. This simply means that it enables the adoption of a progressive dividend policy. As in the year of 2017, their stock offers a very interesting dividend yield of at least 4.5%. This offer would surely help to increase the performance of Astro Holdings and may see a positive growth throughout the years. So moving on to the industry analysis for Astro, which the article found was Astro to face a competition from new cable TV operator called ANSA Broadcast. So basically, every Malaysian knows that Astro Holdings is a very big and stable company where Astro is the only one that has access to satellite pay TV operator. However, it was stated in the article that Astro will be facing a competitor from a new cable TV operator called ANSA Broadcast. Based on some researches, ANSA Broadcast was known as U Television, which was a cable TV operator that is a subsidiary of Tycoon Tan Sri Vincent Tan Berjaya Group. So furthermore, this issue or news had made Astro Holdings affected, which their target decreased from 298 million to 2 RM 2.7 million. So based on a discounted cash flow valuation. So at that time, Astro was facing a gloomy advertising expenditure growth because of the weak consumers' point of view or perceptions. Okay, that's all for fundamental. Now moving on to the company analysis, which we will be explaining for the 4 types of ratio. So the first will be profitability ratio. Okay, according to the table, it shows the calculation of profitability ratio of 2 companies, which are UMW and Astro. So basically, the difference of value based on the 2 companies are quite huge. For example, under gross profit rate, the value for UMW is way different from Astro. However, both companies' values dropped from 2017 to 2018, but managed to rise back in the year 2019. So basically, to conclude for the profitability ratio, is that the higher ratio results are more favorable investors. This is because a high value of ratio simply shows a better performance of the company. So the next type of ratio is liquidity ratio. Okay, liquidity ratios are actually important class of financial metrics used to determine the company's ability to pay off current debt obligations without raising extreme capital. So as shown, both of the company most of the time have an inclined trend on the ratios. So on this matter, current ratio for the company shows an increase of ratio, which prove that the company are able to pay short-term obligation or those due within a year. Next will be on the quick ratio, where it is quite similar to the previous ratio. Current ratio, but focusing on the most liquid asset. The ratio is considered as more conservative measure than current ratio. That's all from me.
Moving on to the third ratio, which is efficiency ratio. The table shown that efficiency ratio are usually used to measure or analyze how well a company uses its asset and liabilities within the company. An efficiency ratio can calculate the turnover of receivables, the repayment of liabilities, and also the quantity and usage of equity. Besides that, efficiency ratio could use to track and analyze performance of commercial and investment banks. In example, under efficiency ratio, days payable outstanding simply shows how long does it take for a company to pay its bills and invoice to its trade creditors or suppliers. Based on the calculation shown, it shows that the average number of days for the both companies takes to pay their debts are about 150 days, which is normal for a big organizations. Other example could be operating cycle, where it evaluates how fast the company could generate income by turning their inventories into cash. So in this situation, UMW Holdings and Astro Holdings takes about 50 to 70 days to make money or turn their inventories into cash. As overall, efficiency ratio is important within a company because a lesser value of the ratios indicates an improvement or positive growth in the company's profitability. So moving on to the last ratio, which is leverage ratio. Leverage ratio is defined as the proportion of debts that the bank has compared to its equity or capital. Based on the figure, leverage ratio divided into four ratios, which are debt ratio, equity ratio, debt equity ratio, and also time interest earned. For debt ratio, UMW holdings tend to decrease from year 2017 until 2019, which same goes to Astro Holdings. Astro Holdings decreased their debt ratio from the first year and has a constant change in 2018. Moving on to equity ratio. Equity ratio measures the amount of leverage used by the company. The ratio uses investment in assets and the amount of equity to determine how well the company manage its debt and funds for the asset requirement. So the third ratio is debt equity ratio. The reason to calculate the ratio is to evaluate the company's financial leverage. It measures the degree which the company is financing its operation through debt or own funds. And the last ratio is time interest earned. So in order to calculate time interest earned, it is by dividing EBIT with interest expenses. The ratio is to measure the company's ability to meet its debt obligation based on its current income. Based on the table, the highest is 9.43 in 2019 by Astro Holdings, and the lowest is in 2017 by UMW Holdings with the ratio of 6.18. So moving on to the last analysis, which is technical analysis, focusing on the first graph, which is by UMW Holdings. The chart displays about the historical prices of stock price for UMW Holdings from the year 2017 until 2019. The type of chart used is candlestick chart, which to describe the price movements of security or derivatives. Based on the chart, in the year 2017, the price started at lower price. The price was RM 4.44 ringgit. However, the lowest price in that year was on November with the price of 2.87 ringgit. The reason that this occurs since the demand affected the prices, you can assume that at this moment, the price falls due to the reason the demand falls as well. Moreover, in 2018, the price started to increase, which started from 4.47 ringgit, and the chart then inclined until the fourth month, which was in April. The price was 4.80 ringgit, then increased to 6.89 ringgit. The investors at the moment may demand for other companies which make the share price of UMW Holding falls and make it to the lowest price of the year. As for 2019, the year shows a mix of chart trend, which includes a downtrend and upward trend. The chart fluctuates due to the reason the investor was demanding for the share, particularly for the company. The highest falls in January 30th of 5.95 ringgit, and the lowest was in May 2029.
Now, for the Astro Holdings technical analysis, based on the graph, it shows the share price of Astro Holdings for 3 years, starting from 2017 and 2019, and it also uses the same chart, which is candlestick chart. Okay, starting with the first month. In the year 2017, which is on the 3rd of January, the price was 2.60 ringgit, and it actually went up for the next day up to 6th of January before it decreases. This explains the small changes on the share prices of Astro at the beginning of the year. It can also be seen that fluctuations throughout the year 2017 is very little, which is normal for an organization. Moving on to the next year, which is 2018, the price started off with a decline, which symbolizes that the company has been affected by possible factors such as economic factors. The candlestick trend in 2018 is far different from the previous year. This is because the price drops drastically, which made the candlestick chart shows quite a bad downtrend. As observed, There are days where the price had increased but it could not hold for long until the price drops back. So lastly, in the year 2019, it shows more stable trend even though there are still fluctuations, hence making the year 2019 way better than 2018. On 2nd January of 2019, the price was higher to be compared with the last day in the 2018 and managed to hold on the price. In fact, the first month of 2019 had proved improvement than in 2018. The prices had also increased a few days up to RM 1 ringgit and 52 cent, which occurred on 9 January 2019. Unfortunately, the trend then starts to slow down and the prices drop little by little towards the end of 2019. The prices was acceptable in the middle of 2019, but to drop badly starting from June up to December, thus making the chart a downtrend again, even though there are still increase in the price on some days in 2019.
For the first company, UMW Holdings Berhad is a stable company as it shows their performance and stability throughout the analysis. The company also has proven that they can generate income regardless how are the economic conditions.
Revenue diversification strategies, topped with effective cost management initiatives throughout the entire business supply chain.